What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol QQQ for the NASDAQ 100 ETF, of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. It's a marketplace that we're watching extremely closely on an intraday basis, and of course, we do cover it here on the channel regularly. The first thing I would point out is just that there is still some relative weakness compared to the SPY, of course. The S&P's recaptured the big flush point up here. That's roughly 450 in the SPY. Obviously, we're much further underneath that in the QQQ. We're also right at that daily 200 SMA, whereas the SPY is above its daily 200 SMA. It's not to say that the QQQ is going to roll over and it has to go to zero. I'm just pointing out the differences between the two big indexes as of right now. In terms of levels to watch out for, though, I do like what happened on today's session. A pullback did occur. We filled the gap, but where did we find support? Right at the area we mapped out in yesterday's video. It was coming from the prior breakout, then support and support into the afternoon, right at 359, we'll call it for round number's sake, right? We'll round up 3 pennies there. So to me, incredibly bullish activity. The buyers stepped in right where they should have, as we pointed out in yesterday's video. And into the close, we break the double bottom neckline because that's essentially what we had, right? We have touch 1, touch 2, a higher low on touch 2, which is going to give you more confidence. There's your neckline, high of day basically, and we closed above it. Now we should start to think of that as a spike in terms of market profile. That's basically just telling us, right, that there wasn't enough time left in the day to determine whether or not these prices are fair. And don't get me wrong, I can see what's going on in the post market. We are trading considerably higher, up around 367s right now. So yeah, it's very likely that these prices are valid up here, but we'll only have the information we need when the market opens. So what we're going to watch for is a couple of things. Firstly, let's put on today's early morning opening gap high. And what we're going to point out is that there's only a couple of scenarios that can unfold. If we open in the spike or above the spike, basically above 364.50, fantastic. Bulls in full control. I would expect the rotation into 369, if not higher, into that next level we have at 378.50. If we open underneath the spike, underneath this breakout point here, expect more consolidation. It's probably going to be a little bit nastier and not be beautiful up and over 361.64. It'll probably come down here and explore once again 359, but as long as it's in that zone, fantastic. We have nothing more than a larger bull flag consolidation period forming like this. Eventually, we would look for the breakout. If it wants to fall back down underneath that level here, around the 359 that we just pointed out, that's where the line in the sand has to be, this level at 353.89. And the reason that is of course it's the top end of the 4-day balance. If that one goes, I would expect this to be nothing more than a lower high and at least make again, if that goes here, then I would look for equal lows to last Monday's lows, which we know is closer to 334.27, and then the bear trend to resume here. So those are my lines in the sand. Those are the scenarios I will be thinking about. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.